brace yourself for a chilling revelation. A renowned financial journalist, Andrew Ross Sorkin, is sounding the alarm on a potential stock market crash, reminiscent of the catastrophic 1929 event. But here's where it gets controversial. Sorkin, a co-host on CNBC's Squawk Box and founder of the New York Times Deal Book, reveals his anxiety about the current market's eerie similarities to the pre-Depression era. He draws parallels between today's AI-driven boom and the Roaring Twenties, a period that ultimately crashed nearly a century ago. The stock market was up 90% from 1928 to September 1929, Sorkin points out, adding, "I'm anxious that we're at prices that may not feel sustainable. And this is the part most people miss, the potential for a bubble." Sorkin believes the rush of investor money into AI companies mirrors the speculative bubbles of the past. With technology and AI fueling innovation, it's hard to distinguish between a genuine boom and an overpriced market. "I think it's hard to say we're not in a bubble of some sort," he asserts. Sorkin's concerns are not just theoretical. He highlights the hundreds of billions of dollars invested in artificial intelligence today, questioning whether it's a gold rush or a sugar rush. The parallels to the 1929 crash are unsettling. Back then, ordinary Americans were lured into the market with easy credit and promises of wealth. Today, modern investors are tempted through private markets, venture capital, and lightly regulated startups, where risk is disguised as opportunity. "It's not that we're going off a cliff tomorrow," Sorkin clarifies, "but there's speculation and increasing debt in the market today." He warns that the post-1929 protections such as SEC disclosure rules and consumer protection agencies are weakening. The Consumer Protection Bureau, in particular, is a concern for Sorkin, as it practically doesn't exist anymore. The push to democratize investing by opening private markets to small investors could backfire, Sorkin suggests. While it may give more people access to potentially lucrative investments, it also exposes them to greater risk. "They protected people from getting rich," Sorkin says of the guardrails that have traditionally protected investors. So, is the market on the brink of another 1929-style crash? Sorkin's insights certainly give us food for thought. What are your thoughts on this potential market meltdown? Feel free to share your agreement or disagreement in the comments below.